Hi, this is Artin Behdad and welcome to third day of this 3 days analyzing course. In day 1, I taught you about analyzing, the importance of analyzing and our goal from analyzing. That was finding the beginning and end of the trends. Beginning of the trends for making money and end of the trends for taking our profit out of the market as much as possible. And in day 1, again, I taught you an important Fibonacci tool, internal Fibonacci retracement, and I showed you how with internal Fibonacci retracement you can stay out of many fake reversals. And our goal there was finding the end of corrections to taking the beginning of the next trend. In day 2, we covered a very quick way for finding trends and corrections. I used alligator indicator for that. And again, I taught you two more tools, Fibonacci tools, external Fibonacci retracement and alternate price projection, APP. And I gave you a lot of examples. Now, in day 3 today, I'm going to put all the material together to find high probability zones for reversals. Okay? Very, very narrow zone for reversals. Let's go to the examples. Okay, this is example 1. You can see in this market, there are trends, corrections, and corrections are overlapping with trends. This correction has overlapped with this trend. This correction has overlapped with this trend. In this situation, we draw one Fibonacci retracement, internal, okay, from here to here. Second, we draw another Fibonacci retracement from the longer time frame, here to again here. Okay, let me repeat it. The first one, the beginning of this trend to end of this trend. Second one, here to end of this trend. Okay, now I want to remove those two lines that are not close to each other. You can see this line is very far. This line is very far. These two lines are a little close, but both are related to this retracement. We don't want that. We want one to, at least one of them should belong to here, another belongs to here. So we remove these two. Now we have a very narrow zone. And we need another tool for being sure about this. We use APP. For APP, as you remember in day 2, I told you with APP, we can find the end of corrections too. But we should draw it on corrections. APP, the first point is here. Second point is the end of the correction. And the beginning of the last correction, as you remember in day 2. Now we can see one of the lines are very close to our zone, and two of them is very far. So we remove those two. Erase, erase. Okay, this is a very narrow zone for finding the end of corrections in advance. It's very important to be in advance. We do all of these things to find out reversal in advance. Okay, let's add the bars to see what happens. You can see price reach there and reverse from there. Okay, let's go to the next example. In this example, you have the same chart. Actually, it's not the same, but the movement is the same. Trend, correction, trend, correction, trend, correction, trend, correction. And you can see again overlapping between trends and corrections. Again, I use internal retracement. I use a couple of examples about one situation because I want to make sure you have learned it properly. Okay? So from here to end of this trend, then from here, longer time frame to end of that trend, you can see there are two zones and two far line. We remove those two far line, and there are two zones. Now we should use APP. Okay, APP from here for corrections, beginning of the corrections to end of the corrections to end of the next, to beginning of the next corrections. Okay, you can see there are just one APP that is close to our zones. This APP is very far, this APP is very far. So we remove these APPs, and this is the only zone that includes one APP and two internal retracement into time frame. And this is our high probability zone. So I remove this one and add a chart to see what happens. You can see, as we predict, price reached our zone and reversed. Okay, the next example. In the next example, I want to talk about end of the trend. As I told you, one of our important goal is finding the end of the trend, because we want to take our profit out of the market. For end of the trend, we don't have internal retracement anymore, because there is no trend for drawing on it, and we just have one trend and one correction. Okay, we want to find the end of this trend. Okay, for finding the end of this trend, I draw APP from here, this trend to end of this trend. The third point is beginning of the last trend. This is our APP. We use external Fibonacci retracement here to here, and you can see in this line, this external retracement is very far, you remove it, and in this line we have a very close and narrow zone, includes one external and one APP, and this is most likely our reversal zones, and we remove here too. Now add bars. You can see at our zone price has reversed. The next example is about trend again. We have a trend here, correction, trend, corrections, trend, corrections. I want to find the end of this trend, okay? This one. Again, like the previous example, I use APP, the beginning of this trend, end of this trend, the beginning of the last trend. You can see this ratio is above this peak. Okay, so this trend should be crossed this peak, and this ratio in advance we should erase it. Okay, because it was above this peak, and this trend should cross this peak. Okay, we have ratios here. Now I draw external retracement on corrections. You can see we have two zones here, one zone here, and there is no zone here. So I erase here, erase this because it's a little far, and I add bars here. You can see price reversed in our zone. Okay, that was what you need for finding and analyzing. And actually our course about analyzing is finished here, is over. But there is one thing I want to add, because I really want you to know it. You know, because there is a pattern, there is a very, very important pattern, very simple, very easy, very predictable pattern, that if you just learn this one, it can change a lot. You know, you can improve your result by learning just this pattern and mastering this pattern. In fact, in one of my classes, I talked with my student and I told them a simple ABC is a sign that God loves traders, you know, because simple ABC is very predictable, and most likely after simple ABC, very big trends happens. And I want you to learn it because it's very amazing and it's very awesome. That's why I really want to teach it to you in this course. Our analyzing course is over, but I want you to learn this pattern. It's very important. Okay? simple ABCs, some sort of corrections. It's very usual corrections. It's very predictable. It's very easy, and it has just two rules that our ABC should follow those rules. The first one, ABC is like this: wave A comes down, B up, C down in down direction, and in up direction is completely reverse. It's the same. Rule 1: wave B should cross the beginning of wave. No, sorry, it's wrong. Wave B shouldn't. This one is okay. Wave B shouldn't cross the beginning of the wave A. Okay, it means wave B shouldn't be here. Shouldn't cross the beginning of wave A. Wave C should cross the end of wave A. It means wave C shouldn't be here. The end of wave C should cross this point. Okay, it's very easy. Please remember these two rules. Wave B shouldn't cross the beginning of the wave A. Wave C should cross the end of wave A. That's it. Okay. If you think you forget this one, please write it down. Click on pause and write it down, because I want to erase it. Okay, let's erase here and show you what is ABC in action. You can see a trend here. Okay, price comes down and made A, comes up and made B, and then again comes down. Wave B didn't cross the beginning of the wave A, rule 1. Wave C crossed the end of wave A, rule 2. It's okay. Then. Now we want to find the end of wave C. Okay, the end of this correction to get the next trend. I click on, this is the same ritual, same routine for all the ABCs. I click on beginning of this trend, internal, beginning of this trend to end of this trend. Okay. I clicked on APP, on beginning of the wave A, end of wave A to end of wave B. You can see there is two zones. This could not be the end of wave C because it's not crossed the wave A, so I erase this. This is again is the same point as wave A, and I can erase this too. And we have one APP here and two internal retracement. This is too far to our APP, and I can erase this too. I should draw another thing, external Fibonacci retracement from A to B. Now you can see we have a zone. We have a very narrow zone. This is outside, I erase it. This is outside, I erase it. And I put the chart. I put the bars. I click on the bars. You can see price reached there, and wave C ends where we want. Another example about ABC. I told you the routine is the same about ABC. They are very predictable. They are awesome for trading. Okay, I draw internal first. I'll draw internal Fibonacci retracement on here. Second, APP on A to end of the B. You can see this one is very far from this area. I can erase here. I can erase here. And the last one, external Fibonacci retracement. You can see this one is very far from this zone. Okay. Now we have two zones. This zone is very wide, and most likely it's not the end of wave C. So I'll erase here and add charts. And exact like what we predicted. It's very predictable, you know, it's awesome. Like I like this pattern very much. And you can see it's not this one. This is A, B, C. Okay? Another example about ABC, because it's very important and it's very awesome for you if you want to make money in this market. And it's very predictable. It's very important. Okay. As our routine, I draw here to here our internal Fibonacci retracement. Then APP. This line is not our thing because it's very far from, it's not crossed the beginning of the end of wave A. So rule number 2. And this one is very far from our zone. We can raise here. We have 2 zones here. Now we draw external from here to here. You can see there are 2 zones, this one and this one, and both can be our purpose, our end of wave C. I add bar here. You can see exactly what happens here. And in this situation, your trading system should tell you which one of these tools, when price reaches, which one of these tools which one of these zones will be the reversal zone. It's your trading system duty. For example, for mine, price in here went to the over zone. I can find this one is my thing. And this one is the end of the ABC. Okay, another one here. This is the last example of this course. Another ABC. I draw internal Fibonacci retracement here to here. I told you the routine is the same. APP. This one is not our thing because it hasn't crossed the end of wave A. This is too far from our zone. We have 2 zones here. And external Fibonacci retracement. This zone is most likely our zone. You can see this is a little far. And this is our zone for reversals. You can see price has reached our zones and come back again. This is the ABC. And I'm sure you've learned ABC completely because they are the same ritual. They are all the same, okay? And you've learned it properly, and there are a lot of ABC patterns in the market. You should train your mind to find it. And you can see here. This is ABC. Watch it. ABC. But it's in shorter time frame. This is for this time frame and this is for shorter time frame. It's very easy actually. It's very easy, predictable, profitable, awesome. I want to talk about ABC all day long because they are very important, they are easy, and I strongly recommend you to take it. Okay? This is the end of this part. Stay with me in the next part. It's very awesome part. It's about psychology of analyzing and some very important tips about analyzing and trading. Okay? So I see you in the next part. Okay. So as I promised you, in this part, I'm going to talk about psychology of analyzing. It's very important. It's very important for your analyzing system. So stay with me to the end. There are 9 situations that I call it 9 when. And I will teach you what you should do in any situation. The first, when price reverses before or after reaching your zone. Let me show it on the chart. For example, you have defined this zone for taking the end of this correction. And it's completely natural. Then let me add the bars here. Price comes down and before reaching your zone, it reverses and make the trend, and you miss this trend. This scenario happens, and it's very good to be prepared for such scenarios, because it happens a lot if you want to trade for a long time. You know, in this scenario, price has reached these ratios. Let me draw it. These ratios. You can see 38%. But please, because you missed this trend, don't add this kind of ratios to your analyzing, because this is low probability situation. In many cases, price comes here and make a fake reversal and you lose your money. So if price didn't reach your predefined zone or pass it then reverse, so no worries, don't take that trend and go for another trend, another analyzing, and take your profit from that trend. Okay, in this situation, you should be prepare your mind. If price didn't reach or passed your zone, ignore it. Okay, the first. Second, when a trend reaches its target zone. Actually, it's a little technique. I want to give you a little technique for you, because it's very important for making more money from the market. Let's go to the chart again. Here, for example, you bought here. Let me here. You bought on this candle, and your stop loss is here, and you are making money in this trend. Then price reaches its target. Let me tell you something about trends. Trends most likely are like wild horses. Sometimes they run, you know, and it's very good for you to let your profit run with the trends. And I recommend you, when trends reach its target, don't close your positions manually. For example, don't click on the position and close it. But trail your stop loss to the last part, to the low if it's an uptrend, low of the last part, and trail it. I teach you how. So your stop loss was here. Now delete it and trail it to here. If price comes back, then it take you out of the trend. And if trend runs again, you can trail it with the trend. So let's add the bar. You can see the next price loss went higher. Okay, I delete this stop loss, trail it to here. Another bar. I trail it to here. Trail the stop loss to here. I remove this one, trail it here. Let's add another bar. Okay, I trail my stop loss here. Another bar. Each bar I trail it here because we know in advance this is the target of the trend, but we should let our profit run. We shouldn't limit our profit. And again, with each bar we trail our stop loss. We trail our stop loss, and that's it. We are out of the trend right now. Instead, we manually close our position here with the trend take out us here. Okay, so when price reached its target, don't close your position manually. Just trail your stop loss to the low of the last bar in the uptrend, or the high of the last bar in the downtrend. Okay, it was the second scenario. The third one, when a trader wants to add more indicator. You know, more indicator is not better. In fact, enough indicator is better. Because people think if they add more indicators to their strategy, maybe their value should go higher and they make more money with less loss. In fact, they want to don't lose any money, just make money. It's not gonna happen in Forex market. And I recommend you to look for enough indicators, because when you put an indicator in your chart, in your strategy, in many cases, in all cases, each indicator makes a filter for you. And by adding more indicator, you lose more opportunity. And by adding more indicator, not only you lose more opportunity, but also you make your strategy more complex. So don't do that. Enough indicator is better. When a trader wants to invest large percentage of his amount, his account, it's wrong. No matter how your analyzing system is powerful, no matter how master you are, you should spend a rational percentage of your account that you can handle it if you lose it emotionally and rationally. I will teach you what does it mean. You should be able to afford you losing a trade emotionally. I mean, when you lost it, you still have a proper mindset, proper situation in your mind and your body. And rationally, because your account should be able to afford the amount of your money. For example, if you have a very small account, for example, $100, maybe it's not very difficult for you to lose 50 bucks. But 50 bucks is 50% of your account. It's not rational to lose 50% of your account in one trade, no matter how powerful is your analyzing system. Okay? The next one. When a low probability situation tempts trader to invest. As a trader or investor, you should invest only on high probabilities. For example, if you want to buy a property for investment, you should buy a property that most likely will increase its value. Okay? Not low probabilities. Always invest on high probability situation. Always trade on high probability scenarios. Okay? Always. Always, always. When a trader analyzes but ignores it. Actually, I've seen it a lot, because I've seen, for example, traders analyze this is a reversal point, but as soon as price made a reversal, whenever it is, they make their trade. It's crazy. Don't do that. If you are analyzing, please respect your analyzing and don't ignore it. And just trade when price reaches in your zone. When price reaches the zone. You know, analyzing, I told you about analyzing the day one, should be in advance. It's very important. Everything about analyzing is in advance. When price reached your zone, your predefined zone, you shouldn't analyze anymore. Okay? Analyzing is for when price hasn't reached the zone. When price reached the zone, don't analyze anymore. Go for trading system, go for entry signals, a stop loss position, your lot size, just it. No analyzing anymore. Okay? The next one. When a trader analyzes properly, but he loses. You know, no one in the world, no matter is it Warren Buffett, George Soros, Bill Williams, no one in the world are winner in all of his trades. All of them lose. All of them are prepared for losing. So when you are analyzing and you find a point and you lose a trade, don't try to modify your system. Know your trading system, know your analyzing system. Losing trade is natural in this career. You can't find a system that never loses. If anybody told you he has a system you never lose with it, he's a liar. I promise you he's a liar, and don't listen to him. Okay? So you should prepare for losing, but with your profit you will recover your losing and you make more profit. So if you analyze a chart and you lost, no worries. It's completely natural. Go to another chart, another situation, another opportunity, and try to trade there. And that's, no, there is another one. When a day trader use analyzing in news time. Actually, this last one is just for day traders. And if you are trading 4-hour chart or longer, ignore this one. It's not for you. It's only for day traders. If you are a day trader, you should go for Forex Factory or any other website that shows calendar and news time. Go to Forex Factory, for example, and in this page, in the first page, you can see the news time. Ignore these yellow and orange colors, but this color is important. This red color is important. For example, this is red high impact news about cat. Okay? In this time, you shouldn't trade those currencies that include cat. For example, USD CAD, CAD JPY, or other currencies that include CAD. Okay? Or if you want to know about the news in the week, you can go to the calendar here, and you can find out news time during the week.